Now we get to our joint cost at net realizable value. And, well, what is net realizable value? Net realizable value, it's the value that you realize that you really get net of any costs. This is a term, a topic, something we cover as well as in FAR, just to make the connection there. Yes, if you're thinking the same net realizable value from that, then you are thinking of the right topic. And it is the selling price of a good minus its costs to sell or any cost of disposal, right? So the net realizable value of your equipment or of your inventory or whatever it is. What can you get today? You wanted to sell it and get some cash for it, right? The realizable value, what you can get for a product net of costs. So I like to describe it and think about it. And what we're going to see here is you allocate joint costs, which we've been doing. So nothing new, nothing crazy. However, you're going to allocate them based on their net realizable values. Nothing crazy. All right, let's get moving on to an example here. Now we have an example, and Armor Corp is going to lend us its financials, and we're going to take a look and walk this through. So we'll read the question. What is the joint costs assigned to set 1 and set 2 if costs are assigned using net realizable value? Now, this question is going to want us to know how much of the joint cost is going to be allocated between both of the products. We know that it's using the relative net realizable value, and relative just referring to the net realizable value relative to each set. All right, so we are going to do a little calculation. We are going to read the information and knock it out of the park. Armor Corp produces joint products, set 1 and set 2. So we got a factory, right? We're making set 1 and set 2 under the same roof, and as such, they have joint costs. So they each incur separate production points after the split-off point. Information concerning a batch produced at $500,000 joint cost before split-off point is as follows. Now, what is a split-off point? This is something I want to cover, I want to talk to you about, and what better way than seeing it in an example? So as I said, we are under the same roof. Got a factory here. It's a nice looking factory. It's not symmetrical, but you're not going to tell anyone, right? So under this roof, we have an assembly line, right? We got an assembly line. We're moving this way. And let's say we have a piece of wood. Gosh, I just love using wood as an example. Maybe I should get more creative, use metal or something else. But no, not today. My creativity will not shine itself. We have a piece of wood. Now, this is not set 2. This is just piece of wood. And it goes down the product line right here. And then at a certain point, the split off point, then it goes off to become set 1 and set 2. See, it splits off. Now, set 1 could be a chair, set 2 could be a table. See here, but what happens here? This is, okay, we clean the wood, we get it ready, we shave it down to a certain size, and then here's where we start to make a chair, and here's where we start to make a table. That's a split off point. And, well, there are costs incurred before the split off point and costs incurred after the split off point. So that's what a split off point is. And you'll see that in some questions. Now you know. More you know. All right. So we want to know what is the joint cost using the net realizable value. This is what's provided to us. We have our sales value and our separable costs. Now, separable costs are another way of saying your costs to sell. So what is the net realizable value? Well, as we saw in the formula before, it's just sales value, selling price, minus cost to sell. So 120 minus 30 is 90. 90 minus 50 is 40. Look at me doing that math. Are you proud of me? I hope you're proud of me. You know what? I'm proud of you as well. All right, so we have our net realizable values for each. And say it with me, just as we've done before, we need our, what are we allocating? And then how are we doing it? Well, we're doing it based on the net realizable value. Net realizable value, the total here is $130,000. We add these two together. 90,000 for set 1 divided by 130 is 69%. 40,000 divided by 130 is 31%. So 69% of 500,000 and 31% of 500,000 You can totally round these. I'm just using it as an example. Generally, questions will be much more clean than my examples, so that's why I round mine. But hey, I'm creating them from my mind from scratch for you, for your enjoyment. Maybe not your enjoyment, but for your benefit. So here we see, right, how much of the joint costs are allocated to set 1, how much are allocated to set 2. These equal 500. It's the total amount that needs to be allocated. Same process for all of these. It's just how are we getting to what we are going to use to allocate, right? How are we getting to those percentages? It depends each time. In this case, we use net realizable value. Wonderful. Great. I mean, a question could just say, all right, we're using hours. Like, doesn't have to say activity-based costing or joint costed net realizable value. It could say we're allocating based on hours or based on units produced. It could say anything. It could say allocating based on the amount of sunny days during the year. I mean, it could be anything. They wouldn't say that. Maybe I'll say that, but they wouldn't say that on the test. But it could be anything, just to give you reference. Here we are. Awesome. Awesome, awesome. Joint costs at split off. Let's talk about the split off point a little bit more because why not? I'm sure you enjoyed it. You come here for your entertainment and enjoyment. Who needs Netflix or Disney Plus when you've got me just going off about accounting? It's a wonderful time. It's a great time. Nothing better. But your split off point, as I said, is where you take a raw material or something and it splits off. And at that point, it's when it can be considered an individual product. So we have individual product A and B, right? It's a raw material, but now it's individual products. For example, at a lumber mill, logs are produced from trees. The split off point would be when the logs get turned into planks or sheets of wood or other various products. That is the concept of our split off point. And how is it going to apply to a question? We'll see. Joint cost at split off example. All right. Henry Motorbike Company produces Model A and Model B bikes. Let's read the question. What's the difference in allocated costs? Okay, so we're just allocating costs using Model A and B. And here we're doing actually both the net realizable value and the net realizable value at split off approach. We're doing both. We're going to see how they compare and we're going to have fun with it because you're not allowed to do this unless you're having fun. Well, there's approximately 15,000 of split off costs. And you can see here in the explanation, wouldn't you know it, we're allocating those split off costs, 15,000. Right, so it's 15,000. That's how you get that we may allocate using the relative sales value at split off or the net realizable value approach. Before split off, Model A sells for 30,000 and Model B sells for 50. So here's another interesting point with split off and continuing manufacturing. So let's say that, right, so before split off, so before that point in the production process, Model A sells for 30 and Model B sells for 50. However, we can actually invest a little bit more. So we can invest $20,000 more after split off, 8,000 of which goes to Model A, 12,000 of which goes to Model B, and now both bikes sell for 70,000. So just by investing a little bit more in each product, we can now bump up the sale price from 30 and 50 to now 70 for each. You see that? That's sounds pretty solid, but let's see if that's a good decision. So $20,000 initial additional investment, right? We will see that. So first we're going to do the relative sales value at split off. We're going to dive through this and see what's going on. Well, relative sales value at split off. Okay, we have, well, what are we allocating? It's the 15,000, right? Here we go. We have the sales value at split off. It's at split off. It's 30,000, right? 30,000 and 50,000. So we get 80,000. 30,000 divided by 80,000 is 37.5%. 50,000 divided by 80,000 is 62.5%. We have our percentages, and as we do, we multiply them by the costs that we want to allocate. And here are the joint costs allocated to Model A and Model B. Nice. Nothing too crazy there. Enjoy it, right? Enjoy it. Nothing too complex. And even if there was just a lot more information here, they try to make it more complex. This is what you're doing, right? This is what you're doing. This is what you're trying to get. But just practice it, right? Look for the patterns. Look for how you're going to just allocate those costs. Now, what about net realizable value? Okay, we want net realizable value. in the aggregate. So after we deal with this additional investment and increased selling price, we need to calculate our net realizable value for both model A and B. Both now sell. What's the selling price is 70. Additional costs are 8,000 and 12,000. So our net realizable values are actually 62,000 for A and 58,000 for B. Great. We have our totals on the side, and same thing. 62 plus 58 is 120. 62 divided by 120 gives us 51.67%. Yeah, a little gross, but again, you won't get these gross formulas on the exam. It'll be much easier to round and clean numbers. 58 divided by 120 is 48.33, and multiply those by 15,000. That's how you get your joint costs using the net realizable value approach. It's all connected. It's all using the same methodology of we've got joint costs, and then how do you allocate them? You're knocking this out of the park. You're going to do well. You're enjoying it. You're having a great day. And if you're not having a great day, then tell me and I'll come over there and I'll make sure you're having a great day, because I will drop a whole load of questions in front of you and say, you got to get these done. You got to practice because you're going to pass this exam and you're going to be able to move on with your life and enjoy it. You'll flash that CPA license around everywhere and everyone's going to be like, oh my gosh, you must have had a great time studying. And you'll say, yes, I did, because Nick kept me entertained with his cringy commentary and semi-funny jokes. Let's keep moving on. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.